Hey everyone, welcome back to Corporate Decoder, the place where we try to decode corporate filings, which are usually harder to understand than ancient hieroglyphs. Today we're diving into the latest annual report for Vislink Technologies, and let me tell you, this one has a plot twist worthy of a soap opera. Think delisting from the Nasdaq and a major shareholder shaking things up. So, what's the story? Vislink Technologies is a global tech company focused on collecting, delivering, and managing high-quality live video. They work in two main areas: live video for news, sports, and entertainment, and secure video for military and government users. First big piece of news, Vislink has been losing money, and to try to fix that, they started restructuring last November. This means they are trying to save cash by cutting costs, closing facilities, and laying people off. They spent about $6.5 million on these changes in 2024, but they are hoping to save about $7.8 million every year going forward. Now let's talk about cybersecurity. Like every company these days, Vislink depends on computers, and that makes them a target for hackers. So far, they say that they have been not severely affected, but they know they need to keep investing in security to stay safe, especially since cyber threats keep getting more sophisticated. Here is where the story gets interesting. On the 10th of February 2025, Vislink decided to leave the Nasdaq stock market. Instead, their stock is now trading on something called the OTCQB. This move was made to save money and operate more efficiently, but it also comes with some risks for investors. Now let's look at the raw numbers. For the year ending in December, Vislink took in about $27.7 million in revenue. That's only slightly better than the $27.55 billion they made the year before. Here is where we get to the bad news, is that because they decided to discontinue some older product lines and move their manufacturing, they had to write down the value of their inventory by a whopping $6.8 million. That's a huge jump from the roughly $500,000 they wrote down the previous year. All of this means that Vislink had a net loss of about $20.6 million, which is way more than the $9.43 million they lost the year before. So clearly there is work to do. One thing that might scare off investors is how much Vislink relies on predicting the future. They even say themselves. They mention that they buy inventory based on what they think customers will want. If they guess wrong, they could end up with too much stock and too little cash, or not enough inventory and lose sales opportunities. That's not good for anyone. There may be a problem at some past meetings. Vislink's shareholders didn't approve all the proposals. This could create issues with how they issued shares of stock in the past, potentially causing accounting problems and even legal claims. Another red flag if I have ever seen one. Something else to consider is that Vislink might decide to stop filing reports with the SEC altogether in the future. This would mean less information about the company would be available to investors, so make sure you do your own research. Speaking of investors, there is one investor that could be a double-edged sword. Keep in mind that a major shareholder, Hell Capital Partners, now owns a large chunk of Vislink stock. They haven't said what they plan to do, but sometimes when a big investor gets involved, it can lead to big changes in the company. It can be good or bad. And now the scariest thing I've heard today, something else to keep in mind, is that Vislink has admitted they have some serious problems with their internal controls over financial reporting. Like, they haven't been able to implement a strong set of controls, meaning it is easy to make mistakes, or worse, in their financial statements. Finally, this report admits that the stock price might jump around a lot. Many things can influence it, including how well they do, what the overall market is like, and even just rumors. It could cause many sleepless nights for those who aren't prepared for such risk. Let's end on a positive note about how Vislink is getting serious about cybersecurity. They're trying to manage the risks from online threats to their computer systems and data. This includes figuring out what parts of their business could be attacked, who might attack them, and how likely and damaging those attacks could be. This is a sensible action. So what do we make of all this? The auditors clearly presented that they are an independent company, but you always need to take that with a grain of salt. It's easy to say things like the financial statements present fairly. However, the underlying financials need to make sense. The main takeaway is that Vislink is going through a rough patch. On one hand, they have some growth opportunities with military contracts and the rise of mobile video, but also on the other hand, it has a laundry list of problems, from losing money and operational problems to stock issues and cybersecurity. And to be fair, they are addressing it and know that they need to improve, or else. Thanks for watching. If you enjoyed, please subscribe, like, and comment.